do a sector review. I'm going to go pretty quickly so I don't take up too much of your time. And I'm going to walk from the most oversold to the most overbought. And if I have particular comments, I will share them with you. Right now, Home Builders Index broken down, support here. We'll see if it holds. I wouldn't be a buyer here. I'm going to do another report on the home builders a little bit later. I think they're in big trouble. Seasonally, they're not a good buy until the fall. Discretionary stocks are they're still selling down. They don't really move, not a lot of beta to them, and they're not a buy signal at the moment, although they can be probably next week. Financials also broke down a little bit below the 20. Still has good support, and looks like maybe a couple days they'll be in a position to buy again. SPY, I talked about this in my other video here. Monday might be a down day. Next week's positive seasonally. Back the next 2 weeks, and then the last 2 weeks are pretty negative. So right now it's too soon to buy, but I'm keeping an eye on them. They're still in a bull trend. Moo, very bullish on Moo. It's holding up nicely. It's recharging. The intensity's still there. I'll be a buyer again of Moo when I get a buy signal on the momentum side. Energy is one of the top performers for the month of May. It's still in a good trend. Intensity's still there. Momentum's recharging. And, when you get a buy signal on this one, you have to take it. And looks like we still maybe have another, 5% in it for the month of May. So keep an eye on that one for a buy. Consumer staples for the month of May. This is also supposed to be a big benefit or a top producer for the month of May, but it broke down. It's making lower highs and made a lower low here, and the momentum's kind of weak, and the intensity doesn't look that great. So I'm going to stay away from the staples for right now. JJG is the grains. They're just doing well. This is more secular for me, but if you're buying, I wouldn't buy right now. It's pretty overbought, but it looks like it still may break out. Kind of like the miners a little bit. You got to pick your poison when they get in. Had a good move last week to buy, and but chart looks good. So on any weakness, it looks good to add to or buy to the grains. The miners and metals, they've been on a tear here, and but momentum just dropped. Intensity is still really strong. May is kind of neutral on the miners. June is negative on the miners, and we're pretty overbought in general. So I wouldn't be buying here. But although it looks like consolidation is still good, and may have another pop here. But some couple things to bear in mind is Sunday night the Japanese are back, and they may be selling off the metals and the miners and trying to prop the dollars as they try to devalue the yen. And on Tuesday is the next COT report, so we may be strong into Tuesday, and we may get either a Sunday night or a Tuesday night massacre on the metals and miners. So I wouldn't be buying here unless you absolutely need to get in for a longer term. I'd let this thing get a break because it's definitely due. It's just really stretched from its long-term trends. Utilities are struggling. The intensity is not there. Looks like the momentum is ready to roll over. Lower highs, lower lows, and this may break. So they might be anticipating some weakness in interest rates or a rise in them, if you will, weakness in price going into the June meeting. Oil's been a beast. It's still strong. It's still seasonally okay. Intensity's there, momentum's there, and if we get any kind of pullback, you still need to buy it. The pharmaceuticals, No momentum, no intensity, and it made a lower low. I'd stay away from them. Healthcare sector, the same as pharmaceuticals. Technology's really been getting hit pretty hard. And, hey, this still could be tracing out a bear flag. No momentum, no intensity. This thing can still drop down, potentially another 5 or 6%. But this is not a good looking chart, so I wouldn't be catching any knives here. The top 50 looks a little bit like the technology stock. Broke down, maybe a double bottom here, but intensity and momentum are weak. I'd stay away. IWM, again, looks like technology a little bit, except it has a higher low. They may bid this thing back up, but right now I wouldn't be a buyer. This thing, momentum turns up and the intensity stays in the upper half of the range, then you probably give it a shot. But it's pretty stretched as it is. May need some more consolidation or fall further. Semiconductors are just been crushed, and no need to get long them at the moment. Biotech, very interested in biotech. It's been following a really nice channel. It's pushed down, even though momentum's down, intensity is getting to pretty oversold areas, and it's still making higher lows. So we'll see if it can hold the channel, and may need a few more days. But if this thing turns and intensity turns up, biotech might be the way to go. Industrials are just been pretty solid. Intensity's still there. Momentum's recharging. We'll just have to see when momentum turns up if intensity is going to turn up with it. The materials is looks like it's ready to roll over a bit. May and June are not very friendly to material section, and momentum's down, intensity's rolling over, and this makes a lower low, maybe a potential short. XIV, my favorite to trade. Whenever it gets to 10% off of its linear regression line, you got to take an interest in it. Had a hammer right on it, and so I would be looking for any strength in the market next week to see if I can catch another swing trade on XIV. I'm waiting for the momentum to recharge and see if the intensity will turn up with it. Healthcare looks like the same with pharmaceuticals, and same with the healthcare equipment looks pretty weak, and it looks like it's rolling over, and I wouldn't be a buyer here. Ag chems, one of my favorites. I trade MOS a lot, holding up really nicely here. Momentum's recharging, intensity is not really selling off. When momentum turns up, I'll be a buyer in this space. DBA, Ag Fund, a little bit more than grains. You get a few other things like cattle and sugar and cocoa in there. It's doing really well. Probably too lofty to buy right now. I'm a little concerned that we have a lower high here. But from a secular standpoint, you need to own ag stocks, because the La Nina year will drive and support the prices here. JDXJ, what can I say? It's been a beast. It's just way overbought right now. And whenever my moving averages and momentum coincide, we have a sell-off. So I wouldn't be surprised if next week or next 2 weeks we're going to get a sell down in GDXJ. So I wouldn't be in a hurry to buy this right now, because you may take a pretty good hit on it. And that's the same with GDX. Silver, the same. Gold, the same. And we're back to the home builders again. So I really appreciate it. I'll do some more posts as I can this weekend. I think it's going to get really exciting in the market. So I really appreciate everybody paying attention. Thank you. Bye bye.